Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Hello, everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything security, compliance, fraud, scams, and anything that has to do with safety and security in the Web3 space. And today we have a very interesting guest. We have the Chief Executive Officer at Bittrex Global. I know that this name rings a bell, Oliver Linch. And if you ask yourselves, why am I speaking to the leader of Bittrex? It's because we want to learn what's going on with Bittrex, because you obviously read it in the news. And we also want to give some do's and don'ts and some tips to the existing exchanges and to see what lessons can they learn from the story of Bittrex. So we're going to dive right in and we're going to talk about what went wrong, about the process of basically winding down the company. And we're going to talk about many different things because Oliver also has an extensive background as a lawyer. And we're going to showcase basically the legal aspect of all this and obviously the relationship with the regulators. So stay tuned. Oliver, after that long introduction, welcome.
And a very nice introduction. Thank you, and thanks for having me on the show.
Thank you. So before we dive in, and I have lots of questions for you, could you please introduce yourself? Tell us about your background a little bit.
Absolutely. Well, as you say, I'm a lawyer by background. I like to say I'm a lawyer in recovery because I managed to escape it a little bit. But I spent, 10, 15 years in the traditional finance sector, advising banks, financial institutions, central counterparties, exchanges, that kind of thing, on a whole range of financial regulatory law in the UK primarily, but also in the EU and the US. And in the last few years of that practice, which I guess was like 5 or so years ago now, started to really focus on fintech. And so you take traditional financial market infrastructure and fintech and mash them together and you sort of get crypto. So I joined Bittrex Global back in 2021, which by my reckoning is about 426 years ago, as general counsel. And then the following year, found my way to being the CEO of the company and ran it happily for a couple of years. And then came to a decision at the end of 2023, in conjunction with our founders and shareholders, that it was time for us to move on with the company and do other things. And so we announced at that point that we were shutting down, ceasing operations, ceasing trading, and began what turned out to be quite a lengthy process of returning funds to customers.
Yeah, so we're going to talk about Bittrex and what was it at its prime and about the processes I've mentioned. But maybe before that, I'm just curious to understand. So moving from being a lawyer into becoming a CEO of a crypto company, do you think that, your trade, your profession gives you a unique perspective? What kind of, let's say, practices have you implemented from the get-go, from, starting the role that helped you, that you took basically from your previous jobs?
I like to think it helps for sure. And the path to go from lawyer or general counsel or chief legal officer, whatever the title is, to CEO is not a particularly well-trodden one, even in the traditional finance sector. But it's becoming increasingly important. And the reality is, whether it's traditional finance or fintech or crypto or Web3 or whatever you want to call it, law is becoming an increasingly important component. If you are looking to lead a bank or looking to lead a clearinghouse or a traditional exchange, having that understanding of how the regulatory impact or the regulatory framework impacts your business is actually increasingly valuable. And I think back when I joined in 2021, no one was having that same conversation about crypto. We look at the perimeter now and we say, well, actually, regulations everywhere, law is everywhere. It's easy to forget that 2, 3, 4 years ago, that simply wasn't the case. And the reason I joined Bittrex is that they were one of the pioneers. They were really at that point the only voice out there saying crypto and crypto exchanges need to look an awful lot more like traditional exchanges. They need to embrace regulation. They need to work closely with regulators. They need to do things the right way because that is the only way that we get the confidence of both corporate and retail consumers to actually investigate the sector and really show the interest in crypto that we want to see. Now we look out in 2025, that's obvious, right? Everyone's got that talking point. Whether everyone's actually doing it is a different question, but everyone at least says they're doing it. So I think bringing the legal perspective and the legal background is an incredibly important component of what it means to operate a modern financial services company, and maybe even more so, a modern crypto company.
Yeah, I totally agree with that. And, I'm old enough to remember when you could go to Binance, for instance, just as an example, but many, many other prominent exchanges as well, and just sign up, with your email without going through any KYC process.
Absolutely. It's shocking to us now, but Bittrex Global never did that, right? Bittrex Global, you could never sign up without going through the full KYC. And at the time, we were there shouting about how great this was. There were a lot of people then that said, "What the hell are you doing? Crypto's all about anonymity. Crypto's all about being covert and subversive." And we stood up and said, "No, no. Crypto is about facilitating all the advantages that digital assets can bring, but doing it in a responsible and respectable way. And that means properly. And that means getting, boring lawyers like me to come and sit on boards and say, actually, no, KYC is a thing, money laundering regulations are a thing, counter-terrorist finance operations are a thing, and this is how you can actually integrate them. And without losing the benefits that digital assets bring, because it's very important to keep oversight of that, you can do these things in a respectable and grown-up way. Yeah, that's now the prevailing view, but that wasn't always the case. And I'm glad to have been able to play a part in helping demonstrate that those two things can work together.
Yeah, for sure. And, during the last, let's say, 3 years, we've seen compliance and legal departments grow, exchanges going on a hiring spree to grow their compliance departments and also to customize them, both in terms of the different disciplines you've mentioned, anti-money laundering, anti-terror financing, and so on, but also regionally, right? Because at the end of the day, you need to attend to the regional regulation and to be in a dialogue with the regional regulators. But by the way, not only in the realms of compliance, think about, let's say, customer support. 3 years ago, if you were locked out of your account, you couldn't get anyone. There was no phone number, no chat bot that you could use to basically, access your account.
Yeah, I mean that's absolutely true. The regionalization point is a really important one I just want to pick up on because this is an area where Bitrex's model is already out of date, and if you want evidence of how fast the environment's moving, this is one of them. We pioneered what is now known as the sort of wheel and spoke approach to regulation. So we had two very heavily regulated entities, one in Liechtenstein and one in Bermuda. And they were basically the two first jurisdictions that allowed you to get regulated as a crypto service provider, what we now know as VASPs or CASPs or whatever the terminology is. And we provided services from those wheels via spokes. So we had one in Liechtenstein, which provided services to the EEA, one in Bermuda that provided services elsewhere. You couldn't get away with that now. That's simply not good enough. You need to be locally regulated in pretty much every major jurisdiction going. Right? The UK hasn't yet quite figured out how you're going to do that, but it's going to be there soon. Korea, Singapore, Hong Kong, the US, right? Not to open that particular Pandora's box. But the wheel and spoke approach was pioneering and over-regulated. Like we did this voluntarily back in 2020, 2019, 2021. That was voluntary then, and it wouldn't be good enough now. So the pace at which lawyers and compliance officers need to keep on top of what the requirements are is changing in real time. You can really see it, and that's what makes it exciting.
Yeah, and you can also see that the cost of entry now to become a crypto exchange has grown significantly, right? The barrier is much, much higher. And if you need to go to market with not one but several licenses, and then you need to hire compliance people, and you need reporting, and you need to pay different fees to regulators and so on. At the end of the day, there is no room for the small fish, right? And that's why we see this consolidation. We read about the acquisitions that we see constantly in the Web3 space. So definitely it has changed significantly right now to set up an exchange that will go global and that will be regulated, because obviously you can work below the radar if you're small enough. But once you start going global, then you need a substantial amount of initial capital to get started.
I get that, and I hear people complain about that all the time, and I understand that it's frustrating. Barriers to entry are, from a general competition perspective, bad. And if you've got an innovative idea and you want to get into the market, it is really challenging. It costs a lot of money. You need a lot of time and expertise. I fundamentally don't care, right? And I have no time for people that whinge about this because it's my money. I wouldn't put it in an unregulated bank. Some guy comes along and says, I've got a really strong safe. You can trust me. I'm like, no, you're not getting my money. Why would I put you in an unregulated bank? That should be just as strong a reaction when I'm talking about buying crypto. Buying and selling crypto should be just as anathema to think, well, this one man band has put together what looks like a cool contraption. That's not how it works. That's not how it works in the grown up world, and that's not how it should work. So, yes, is compliance expensive? Massively so. Are the legal restrictions sometimes really annoying? Like, do they actively stop you doing things that you think would be interesting to customers and make you loads of money? Yeah. Like, do the laws get it right all the time? No, we should definitely work on that. I'm not saying in any way that it should be crystallized, but to say it's really difficult. Yeah, you're damn right. It's really difficult. It should be. You're talking about taking serious amounts of other people's money, so it should be difficult. So, I completely understand why people whinge about it. I completely understand the system stacked against me. It only favors the big five crypto exchanges. I get that mentality. I really do. But that's the only way it can work now, right? It's the only way that we can keep the confidence that we've been growing over the last few years in crypto. And it's the only way we can grow the industry into the mature, respectable source of finance that it really can be.
Sure thing. So I think it's a good time to and a good segue to talk about Bittrex. So let's rewind some 2 years ago. Okay, what was Bittrex at its prime? How many clients did you serve? What type of services have you provided at the time? Where you've mentioned two licenses that you had, but please give us kind of the general overview of what was Bittrex.
Well, let's rewind a little bit more than 2 years. Let's go back to the founding of it. And people that have been in crypto a long time will know, we started out in 2012, 13, a very long time ago in the US. We had three security engineers who founded the company and basically did so because they looked at what was out there, realized that it kind of sucked from a security perspective, and decided to build their own. The foundation myth of Bittrex is that they did it over a weekend in one of their garages. I don't know if that's true. I think it took a bit longer than that, but it makes for a good story. And they did so on the basis of security first, right? That then turned into a sort of three pillars of security, innovation, and regulation, and that became our mantra for a long period of time. And after about 5 or 6 years of doing that, they realized they needed to be serving customers outside the US. You can't really be doing that from within the US, so they set up Bittrex Global. So Bittrex Global existed only ever to serve non-US customers and set up this regulated exchange in Liechtenstein in the EEA. Was one of the first jurisdictions to set up a bespoke regulatory framework for crypto and introduced many of the concepts that became what we now know as MiCA. Right, Liechtenstein was doing it 4 years before MiCA even existed, and we said, right, well, we'll be in the first wave of people to get a license in Liechtenstein, and we can serve people on a regulated platform. A couple of years later, similar story. We want to be serving non-EU customers as well. Makes very little sense to be doing that from within the EU or the EEA. So we scoured the world for another genuine regulatory framework that would do what we wanted. And back in 2020, 2021, that was Bermuda. Obviously, the landscape has changed an awful lot since then, and Bermuda is doing what it's doing, but in a very different context. But back then, Bermuda was the one to go for. And so again, we were in the first wave of exchanges that were regulated, and we still are regulated in Bermuda as we go through the wind down process uh, to serve a global customer base. So, our outlook was always sort of ever expanding. How can we serve more and more customers? But what we didn't do, and I think this gets to your why did we end up shutting down? And I don't. You asked the question is where did we go wrong? I don't know that we did go wrong, and it's for the following reason. What we didn't do is aggressively push the boundaries of the products that we would offer to the extent that other exchanges and other service providers would really push the limits on what the law said and create very, very innovative products of dubious legality and say to the market, hey, look, here it is, here's what we're doing. If you don't like it, come after us. We took the view actually that we were a spot exchange. That was our bread and butter. That's what we did. That's what we knew. We knew that our customers relied on us for security, relied on us to be, the grown up, boring adults in the room. And we said, well, okay, we're not going to have affiliated hedge funds. We're not going to have derivative products that nobody can understand. If you woke up one morning and you found out that the London Stock Exchange or the New York Stock Exchange was also operating hedge funds that might trade against you, you'd be outraged. We think our customers will similarly be outraged. We're just going to stay in our lane and do what we do best. At the time, and maybe even sitting here now, I think that was the right decision. But what it meant was those exchanges that sailed a little closer to the wind, that were willing to just tread over the line sometimes, or at least risk being seen as treading over the line sometimes, ended up offering products that we didn't or couldn't offer and overtaking us in the market. And, it's no surprise to anyone. If you look at our market share in 2017, I think we had something like 25% of the market. By the time we shut down, it was a fraction of that. And that's because to some extent we decided to stay in our lane. Like we didn't stand still. We continued to innovate within our lane, but we didn't expand our offering. Now, the good bit about that is we were never putting customers' funds at risks in a way that, look, FTX is the obvious example, but there are loads of others. We were never doing that. And I could sleep at night every night knowing that we had done right by our customers and continue to do so. That's what happened to Bittrex. We made a conscious decision, and by the time we got to 2023, that 2-year point that you mentioned, we looked around, and I looked around in conjunction with my team, and I had lots of discussions with the shareholders, and I said, look, we either fundamentally change what we're doing here and deviate from the true and narrow course that we've been operating under, or we say, look, the market isn't yet sophisticated enough, mature enough to support a genuinely spot crypto exchange just doing what we do, and that the market is still too interested in what I described as twiddly bits, things that you can bolt on, add on, optional extras that we didn't and wouldn't offer. And in the end, we thought about it long and hard, and that was the path we decided to go down.
Yeah, just to add to your point, nowadays you see that crypto exchanges are offering derivatives and futures, and you see that the volumes there are skyrocketing, and exchanges are pursuing different types of licenses. Some of them are not of a very high quality that basically allow you to trade derivatives. Not to mention tons of other products that are not exactly trading related, like P2P payments and things of that sort, that have become a commodity already on the big exchanges. So I totally understand that. I'm just curious, would you say that if Bittrex would be set up today and being a kind of conservative crypto exchange, not going to all the more risky stuff, do you think it would be more successful in the current regulatory environment?
I think there's a very strong possibility of it, right? So I want to be really clear. As of right now, it is perfectly possible to operate a derivatives exchange and to offer some very unusual products in a legal and regulated way. But that is because the law and the regulation have since been invented to cover those situations. So I'm in no sense saying you can't be a derivative exchange and be legit. You definitely can. And there are some great examples of derivatives exchanges, hybrid exchanges, the whole gamut now that can and do operate within very, very strict and very, very respectable regulated entities. There are still, unfortunately, those jurisdictions that allow you to get a license because you've written something on the back of an envelope and said, pretty please, may I have a license? And unfortunately, the industry, I think, is still not good enough at distinguishing those legitimate jurisdictions from the illegitimate ones. And that's really unfortunate. If Bittrex were to be set up today, I think we probably would still be on the conservative side of things, still be on the cautious side of things, but the options available to us now to do things in a regulated way, but allow for that innovation, didn't exist back then. So I think, yeah, this is going to sound like, of course I say this, but we were ahead of our time.
Yeah.
We had these principles that we wanted to only do things that the law provided for, but the law hadn't yet caught up. I think the law's still got some catching up to do, by the way. I think, for example, MiCA in the EU has not turned out to be the roaring success in terms of enabling innovation that many had hoped. I was always a little bit skeptical, but I thought it was broadly a good thing. I think in terms of its implementation, it's been a little bit lacking, and I think a lot of people in the EU who moved to the EU in advance of MiCA are now beginning to think, oh well, this does not give us what we want to do. So they've internalized our message of only do things that are allowed from the regulation, and are now running up against the same frustrations we ran up against, which is actually there is no safe way, there is no permitted regulated way to do these things. So you're relying on the law to play catch up to some extent. MiCA tried to solve that in the EU by being a bit more principles based, but at the moment, I'd say Dubai is doing a much better job of it. UAE generally is doing a much better job of it. Singapore and Hong Kong are engaged in a really interesting little battle for supremacy over in Southeast Asia, along with Korea and Japan. These are top tier jurisdictions all trying to get in on the space. You see someone that's regulated in Korea, you see someone that's regulated in Singapore, you see someone that's regulated, will be regulated in the UK. That's worth something. All of these, oh, I've got 427 different regulated statuses, but I don't actually have to do anything. That's trophies in a trophy cabinet. I'm not interested in that. And in fact, I think we should do a better job as an industry of highlighting to people that, that is a meaningless trophy and isn't providing the protection that customers expect.
Yeah, I totally agree with that. And, per your point on regulators and exchanges, I always say that the regulators are very much focused on securities and not security, right? So, in a sense that securities is obviously something that is very perilous, especially for people that lack the proper education and they're not savvy enough. And, some financial vehicles can be, misused or manipulated and so on. But that's a threat to the individual trader, right? That already knows that they're taking a substantial amount of risks upon themselves. Whereas in issues like hacks and other security elements, at the end of the day, the entire exchange can lose its funds, right? As we've seen right now with the Bybit hack and with Xerox and Radiant Capital and so on. You can lose substantial amounts, and not every exchange can internalize those losses like Bybit did, right? You can eventually create a domino effect that is going to cause much more people to lose much more money if you don't have the proper arrangements with respect to security. So my question to you is, do you agree on that? Because while you're saying that the regulation with respect to securities law is not perfect, not clear enough, not perfect, doesn't boost innovation, I totally agree with that. But when it comes to security, fraud prevention, things of that sort, it's basically a wild west out there.
Look, I completely agree with you on the importance of security. As I said, our founders were all security engineers. That's their background. Bittrex was established primarily to offer the most secure platform that was available at the time, and to this day, even our biggest detractors would accept that the security arrangements that we have and had on the platform are still the gold standard. They're still the best in the industry. I think where it comes to the interaction between security and regulators is one of oversight. Right? So we created one of the most secure platforms in the world because we had a team of the best security engineers in the world. Regulators have a role to play in ensuring proper oversight. I think you're right. Regulators are far too focused on securities, especially in the US, right? We've got this big divide between securities and commodities, and you try and view crypto through that lens, and it doesn't quite work. And you end up just basically avoiding the whole question because nobody is willing to take the mantle of actually getting into the nuts and bolts of what crypto is. And the fact is, it's its own asset class. And I think the most sophisticated jurisdictions, including the EU and Dubai with VARA and the other jurisdictions we mentioned earlier, are now beginning to realize that. What the regulators should be focused on is, okay, you're a service provider, demonstrate to us that you are providing that level of security to your customers that we demand of traditional custodians, that we demand of traditional banks, right? They seem to forget, just because you put the word crypto in front of it, that the fundamental aspect of what you're doing is taking people's stuff and looking after it. And actually, if regulators stopped spending quite so much time navel gazing about the nature of what the products are and just said, okay, they're crypto, we're going to create this new product called crypto and come up with some definitions around that. Now let's focus on the operational side of things. Now let's focus on your security arrangements, on your disaster recovery arrangements, on your business continuity arrangements, on your transaction monitoring arrangements, on your compliance arrangements. Actually focus on that. Actually, the market would be much better protected from the contagion risk you were talking about. The individual would be much better protected from hacks or frauds on both the individual and the systemic level. And fundamentally, the industry as a whole that we're looking to grow would be protected, because when one exchange gets attacked, that's really bad for that exchange. It's really bad for the whole industry as well. Because you remember, it's important to remember, for those of us so involved in the industry, the vast majority of people in the world still don't really know or care about crypto. But they see, they see Bybit was hacked. 2 days later, they're in a bar talking to their friends and like, wait, was it Bybit that was hacked? Or, oh, it was one of them. It's all crypto, right? That's a very, very short step. It's all crypto. It's all scams. It's all hacks. It's not, but you can see how people that aren't reading this stuff as obsessively as you and I do. Just it's easy to throw the baby out with the bathwater and just say, right, we're not interested, right? Actually, the leaders in our industry are doing, but could do a better job of saying, right, how do we protect the industry as a whole? How do we share best practices? How do we, work together with international organizations? How do we increase standards so that you can say, just as I know, if I put my cash in a UK bank or a US bank or a Singaporean bank or a German bank, the individual rules will vary slightly. There'll be slight local variations and deviations, but fundamentally, the way the bank has to handle that money and the protections that I get as an individual, they're basically the same, right? The level of consumer protection might be slightly different. The exact percentages that they have to hold in capital liquidity is slightly different. But I know in crypto that's not the case. Right? If I go down the list of the top 10 crypto exchanges, I may or may not know where they're regulated, if they're regulated at all. But how am I, the average person, supposed to know, okay, it says it's regulated in Luxembourg. I've heard of Luxembourg. Is that a good one? Like, I don't know. It says it's regulated in Australia. Like, I've heard of Australia. Yeah, maybe. I don't know. And I think as an industry, we do best when we say, look, these are top tier jurisdictions. They need top tier laws. And when you're regulated out of one of these jurisdictions, you're a top tier exchange.
Yeah, for sure. And to follow up on that, and we're almost out of time, but I have to ask you, so we talked about the security oriented regulation, but what about fraud and scams? Because at the end of the day, we see right now, by the way, everything is interconnected, right? Fraud, scams, security. At the end of the day, you see the same, fraudulent networks that stand behind it. It's no longer just small time hackers and fraudsters, right? You have consolidation in that area as well. So my question to you is you see that many exchanges are turning kind of a blind eye to that. And we see the data, just to give you, I just pulled up our dashboard at Cybers. I see that from the beginning of the year, during the last 6 months, we already spotted $3.7 billion in fraud, in authorized fraud. Now, it doesn't include scams and hacks and so on, which would easily get you to close to 10 billion, right? That's from the beginning of the year. So exchanges are not attentive to that, and their users are on a daily basis are sending funds to fraudsters, pig butchering frauds, romance fraud, and so on. So now we do see that the regulators are starting to wake up. You're sitting in London, and the FCA has issued the authorized push payment fraud regulation, and we see a similar thing in VARA, right, in the UAE, and East Asia is leading the pack with that respect in terms of the consumer protection rules. So, do you think that eventually the regulators have to self-regulate, or do we need those strong consumer protection rules that actually put the liability on the exchanges? And once the exchanges start seeing their P&L gets distorted, then they will start taking this seriously.
Yeah, look, as with everything, it's about striking the right balance. You mentioned the authorized push payment fraud regulations in the UK. I'm actually quite skeptical about that. I think that might put the burden too far the other way. And I think, consumers have to accept some element of moral hazard for their own decision making. But we can have really interesting discussions long into the night of exactly where you put the line. You're right. What you really need, and I think to be fair, we are seeing some of it, is exchanges themselves taking it more seriously. So you said they're turning a blind eye to it. I think actually the best exchanges, the household name exchanges, aren't, and they are spending large amounts of money on combating this stuff. Layer 2, layer 3 exchanges, like tier 2, tier 3 exchanges, I should say, maybe less so because, they just don't have the cash to throw at these things. So, look, to some extent, as the industry gets bigger, it becomes a bigger target. And it's important to remember that similar numbers for traditional finance institutions are also very embarrassing for them. And you don't read about it as much because newspapers aren't as interested in telling you when big bank 1, 2, or 3 have fraud as they are in telling you how crypto is riddled with fraud. But the reality is the differentiation isn't that great. But does more work need to be done? Absolutely. Does that require heavy-handed regulations in all respects? No. What it probably does require is more dialogue between regulators and exchanges. And this is an area where I think exchanges are still far too slow. When I was advising banks in particular, but also broker dealers, they would have entire departments of people whose job it was simply to engage with the regulators, whether that's formally through consultation papers or informally through just discussions and policy making. The number of exchanges that take that seriously is increasing, but it's still, I can count them on the fingers of one hand, right? And even when they have someone that's head of policy or head of regulatory outreach or something like that, they're not having the same intensity of dialogue with the regulators because I think of the background of the assumption that if we left the regulators alone, they'd leave us alone, right? That was always naive. It was always the wrong approach, but that still permeates the industry a little bit. Actually, with the topics of security, the topics of fraud, working together, both with regulators but also with international organizations, BATF being the obvious example, but IOSCO are in there as well, and a bunch of others, it's to the benefit, long-term benefit of the industry as a whole. So I think a lot more work needs to be done, and I want to see exchanges and other service providers really taking the initiative, reaching out to regulators and saying, look, we're here. We can explain this technology to you better than you can understand it yourself, because the fact is regulators don't have the knowledge that they need to have and can't. They're just too understaffed and too underfunded. We as an industry need to do a lot better at waving a big flag and saying, hey, look, come and look at us. Come pay attention to us. We're no longer hiding. We've got nothing to hide. We're doing all of the stuff you want us to do on KYC, on AML, and CTF. How can we work with you to make the security aspect of it even better too? And I think the responsible exchanges are just starting to do that. And if any of them are listening to me now, please encourage others to do so, because that's how we get the industry to really, really grow up. And as I'm also still practicing as a lawyer, advising exchanges now through my new firm OJL Law. That is an element that I'm beginning to see even smaller players really engage with. And I think that's very encouraging.
Yeah, I totally agree with that. And on that note, a quick question before we wrap up. What's next for Bittrex? Because we've seen quite a few exchanges and other crypto companies that went through some sort of a closing process, some as a joint agreement, as you mentioned, with your founders. In other cases, kind of setter stories with FTX and so on. But even those ones, they had spin-offs and reincarnations, right? I know that Celsius is still alive to some extent and trying to do some other project. Is there a continuity for Bittrex, or is it just a matter of winding down, paying everyone their funds back and closing?
At this stage, we're focused on winding down and doing it properly. And you mentioned some controversial closures of exchanges, but actually, we did this entirely voluntarily. We're entirely solvent, and are showing that it's actually possible to shut down an exchange in accordance with the principles that we lived by, which is doing things the right way. And it takes time and effort and a lot of money to do it properly, but that's what we're doing. So all of our focus right now is on getting that done, getting users what they need, the creditors what they need, working with regulators to make sure that happens in as efficient a manner as possible. Unfortunately, liquidation law in multiple jurisdictions isn't really fit for purpose because it's all written on the assumption that people have physical books and records. I mean, the number of discussions we had to have when we had to hand over the books and records of a company to the liquidators, and like they expected us to get a U-Haul and ship them over handwritten books with like beautiful calligraphy. And we're like, well, we've got some data files for you. It doesn't quite work. So, I like to say we're pioneering even in death, but there we go. So our focus is on that right now. What comes in the future, who knows? Never say never to anything, but there's no plans of us at the moment.
Pioneering in death. Loved it. Oliver Linch, thank you so much. I had a lovely conversation with you. Very interesting. Could have talked to you for another hour to hear all the gossip and all the stories about the liquidation process, but maybe next time. Thank you.
Thank you so much for having me, and pleasure to speak to you too.
Thanks.
Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.